Most often people make mistakes because they think variability of outcome is risk. Market will always try to predict the future. Whatever is the price today, it factors everything what people know, fear or hope for. When something becomes consensus, stay away. Do not draw conclusions. It's very difficult to watch a scoreboard and refrain from drawing conclusions. Stock market or life is not a T20 game. It's not going to end in 20 overs. God, this is the end. 2026 is going to be more of what we saw last year. One of these wars, Iran, Israel or Russia, Ukraine, something might flare up. If there is a war happening in the Middle East, maybe in future if Middle East gets impacted for their markets, it's a direct impact. For India, maybe oil, then what happens to remittances because there are millions of Indians who are employed there and sending money home.
In your experience, how much of investing success is actually emotional regulation?
The most quoted quote or most quotable quote is about psychology. To be a successful investor, आपकी गिनती others में नहीं होनी चाहिए. When others are greedy, you should be fearful. When others are fearful, you should be greedy.
If a 25-year-old asked you for one mindset to adopt for the next 30 years, what would it be?
So I would just say that.
So Aashish, the world today is dealing with wars, geopolitical tensions and economic uncertainty. Tell me, do markets eventually learn to absorb conflict, or as we're entering a structurally more volatile era for investors?
So Ashna, you'll be surprised to know market adapts faster than human beings individually, right? Because what is the market? The market is the sum total of the opinions and fears and hopes of millions of people. And their opinions, fears is what gets expressed in terms of buying and selling. So while you or me as an individual might take some time to digest what is happening, sum total, the market with millions of people buying and selling, it gets into the price faster than what you and me can actually individually, arrive at. So market always prices everything. Like, in Gujarati there is a kahavat which says bhav bhagwan che, which means that whatever is the price today, it factors everything what people know, fear or hope for. So market is priced in everything.
So tell me, historically, markets sometimes rise even during wars and conflicts in the world. Why do markets appear disconnected from the real world crisis?
See, so what will happen is that when there is a real world, when there is a crisis or when there is a war, right? There is obviously, there is somebody who is the aggressor, there is somebody who is the one who's being, impacted or attacked. And then there are so many people who are bystanders or observers. So there are some people who are directly in the action, and there are some people for whom there are different types of implications, like real close implications or remote implications, or some are just bystanders. So what will happen is that at any point in time the market will try to figure out what is the impact. Like the US market will try to figure out what is the impact on US. But well, US actually what happens, a lot of companies are global. So global impact comes on US market. In India, what will happen is that the Indian market will try to factor what is the impact for the Indian companies. And India is largely domestic or inward looking, right? So what will happen is that if there is a war happening, say in the Middle East, for the Middle Eastern countries, for their markets, for their real estate markets and equity markets, it's a direct impact. For India, maybe oil, maybe in future if Middle East gets impacted, then what happens to remittances because there are millions of Indians who are employed there and sending money home. So my sense is that at any point in time, different markets are trying to figure out what is the impact for their set of companies and their set of participants. That's why markets, and the other important thing is that market will always try to predict the future. So for example, today something might look horrible to you. Let's take an example of COVID. When we were in the midst of the first wave of COVID, things were looking horrible, right?
Yeah, it looked like it'll never reverse.
It'll be like, we are the next dinosaur. This is where it ends. That is how bad it was. But even in the throes of complete gloom and doom, the moment the news came that the vaccine is around the corner, right? So there were people, unfortunately, people who succumbed to that virus. There were people who lost their businesses. There were financial institutions in trouble. There were airlines which were grounded. All of us were stuck at home. But market started to go up. Why? Because market knows that right now it looks horrible, but what if there is a vaccine? And there was credible news, right? Like the Serum Institute talking about that AstraZeneca, and there was a few others, Bharat Biotech, and all of the news started coming. So market knew that, okay, this is not going to remain like this
Forever.
for any much longer, because
Yeah.
if the vaccine comes, we all are out. So one is that market tries to take diverse opinions. Different markets are factoring in different things, and most importantly, market always looks at the future. We all get fearful thinking of the past and living where we are, but market always lives in the future.
So, according to you, we are in a situation globally right now which feels like a crisis. Obviously, it is a crisis. Like you said, many people are at the receiving end. Many people are bystanders. Like, I think India at this point is a bystander watching what is happening between the Middle East and
Yeah.
US and Iran. What is your projection for 2026?
So, even before the year started, what happens is that every once in a while, let's say when 2025 ended, or let's say when there is a government's budget which comes, or when, say, there is Diwali, right? So, every once in a while, people like us get called into some discussions that, give like a prognosis of what you think. So, what, even when 2025 ended and the new year started, I was always thinking that it will be more of the same. Meaning, like 2025, if you see, if anybody follows the stock market, you know that the stock market peaked in 2024. 18 months down the line, if you look at Nifty as an index, it is still 24,000, 25,000 plus minus. It's in a range. Now, for 1.5 years, the index has gone nowhere. In fact, started depreciating. And if you look at stuff like small cap and all, it's falling
Down.
even more.
Yeah.
And by the way, Ashna, in these 18 months, our domestic economic conditions and macroeconomic parameters actually improved. Still, market is going nowhere. That's because of external environment. So even when this year started, I was not thinking there'll be, the war was kind of being spoken about, but I was not thinking market will fall, or I was not thinking the war will happen when, you can't guess what is going on in one individual's mind, so you can't predict that. But I used to always think that either this whole AI rally is kind of overdone, or that the US economy will see some kind of downfall, or one of these wars, Iran, Israel, or Russia, Ukraine, or even India, Pakistan, something might flare up. So the prognosis was always that 2026, at least the first few months, is going to be more of what we saw last year. But at the same time, I think that somewhere in this year, you will see the market bottoming out, and you will see India stand to gain in a big way. The reason I'm saying this is because last year when there was this whole AI, I think it is almost becoming a bubble. We did not participate in it.
Yeah.
And there's no reason why, if there is anything happening there, why we should get impacted by it. Second is, if you see, it looks like that, this world becoming more multipolar rather than having two camps. Now there's no camp. It's
Yeah.
all bilateral.
It is.
It is probably suiting us better than trying to find a camp, right? And my sense is that because of last 1.5 years stock market going nowhere, we are actually becoming cheaper and cheaper and cheaper. So confluence of all these things, some part of 2026 in the foreseeable future doesn't look that great. But before the year ends, I think the market will bottom out and you probably will see a rip-roaring up move. So, maybe if we meet a year later, we'll be in a much better position as far as market is concerned.
I hope everyone listening is quite satisfied with that and has hope, because in the end, as humans, I think we all live on hope.
Of course.
And I think, like we discussed before we started, that everything comes down and goes up again in life.
Yeah. There are cycles.
Yeah, there are cycles. I think that cycle of life.
Actually, what happens is that, like Bade Buzurg have said, that life is grey, correct? But what happens is, whenever people, markets, businesses, economies, whenever everything starts looking either completely white or completely black, then you should know that this is not how the world works.
Correct.
The world is always grey. It's a spectrum of grey.
It is.
Right? And even if you see in Bollywood, like for example, there's this, was it a movie or a OTT where this leading character said, "Kabhi kabhi lagta hai Apunish Bhagwan hai." Right? In the stock market also, and in business also, when somebody gets that feeling, you know that this is the extreme. From this is where it is actually going to reverse. And sometimes, like COVID comes, we all feel, oh my God, this is the end. We are the next dinosaur. You should know that human beings are basically jugadu. It doesn't end like that.
Yeah.
Correct?
I completely agree.
Yeah.
I
so
think
extremes you should watch for.
Every time there's been a pandemic of any sort historically, everyone, I'm sure at that point, must have thought the world's ending and everything's going to end, but it doesn't. It's like a pushback and then accelerates further and further.
Absolutely.
So let's go into psychology of investing. Tell me, investing is often portrayed as analytical, but the biggest mistake seems psychological.
Yeah.
And in your experience, how much of investing success is actually emotional regulation?
Oh, it's actually, it's now being appreciated thankfully, but there is an overbearing impact of psychology and emotional control on investing, right? I mean, I can give you a few examples of this. You must be seeing business television, or you must be, people around you might be seeing business television. Sometimes I also do get the opportunity to be there. When you look at business TV, doesn't it look like there is, it looks like a Zoom call actually. It is actually most of the times. So there's one window where there is the, a leading anchor. There's one window where there's someone like me. And around both of those windows, you will see green and red things flashing, some ticker moving, breaking news.
Yeah.
Arrows going up and down, charts going up and down, somebody making dire predictions, somebody saying, okay, no, it looks all great. So if you look at it closely, you will almost feel like this is the control center or nerve center of something. Looks like some cockpit or something, right? And you will feel that, okay, these guys, they're talking all maths and finance and economics and high science, right? But I think the amount of maths and science or economics that is portrayed, utna hai nahi actually, it's a lot more emotion and psychology. For example, the world's most famous investor is Mr. Buffett.
Yeah.
But even Mr. Buffett's, the most famous or most widely attributed quote is not about investing in companies whose return on invested capital is more than cost of capital, or buying companies whose cash flow is growing at a certain rate. His most famous statement is be greedy when others are fearful, and be fearful when others are greedy.
Correct.
So the biggest investor in the world, what the most quoted quote or most quotable quote is about psychology. He's saying that to be a successful investor, आपकी गिनती others में नहीं होनी चाहिए. Meaning, when others are greedy, you should be fearful. When others are fearful, you should be greedy. So two things to note. One, you should not be counted in others. Second, for that, you should know what others are doing and then make sure you don't do that. So first thing is, when there is a war and there is a crisis, you should look around and see what others are doing. If others are forecasting end of the world, then you should have some window open in your head that, this is not how it works. There's another observation I had. Like, for example, you see there's a Nobel Prize, right, for many fields, started with economics. But even in the last 20 years, twice it has happened that the Nobel Prize in economics has been given to people who study psychology.
Correct.
Right? There must be a reason to it.
Yeah.
So I think that the maths and science is limited, and it's more something you can wrap your arms around. It's very, I wouldn't say easy, but it is simple. But on the other hand, the psychology is what, the psychology is what throws people out of the market actually.
Of course, I think success and failure, no matter how intelligent you are, in the end, it's about, how they say in basic terms, using your brain. And using your brain in what sense? The psychology of understanding humans. The psychology of understanding patterns. Because everything runs in patterns.
And I had one more learning, let's say, Ashna, if you were to think that, human beings is the most advanced species, right? I mean, there are many living beings, we know for a fact. So think of it this way, that if you compare animals and human beings, what's the biggest difference? Of course, there are many differences. A major difference is this term called meta-thinking, meaning that we are the only species, barring some chimpanzees, we are the only species who can think and analyze what we are thinking at a particular point in time.
Correct.
We can think and analyze what we are thinking. We can think and analyze our feelings.
Yeah.
So when you said markets and psychology, let me give an example. I was once in a conversation with I've been very lucky with bosses, very famous people I have worked with. So one of my bosses, 2013 was a horrible time in the stock market. And in my profession, when the markets are bad, I don't worry so much about, I know this is how it works. In 26 years, I've seen everything. But what is difficult in my job is talking to people who are at least notionally seeing their value go down. I know it will come back, but on paper it is going down. And you're talking consistently to people who are fearing losing money. At least on paper, the value is down. So 2013 also was one such horrible phase. And I went for a meeting with my then boss. And in the meeting, we again heard the same thing. This looks horrible. Why can't you predict and why can't you avoid and all. So tough meeting. We came out, sat in the car, and my boss said, Ashish, you know what? I think now the market will go up. So I said, why are you saying that? Weren't we both in the same meeting? I mean, you heard what I heard. So what makes you think this? He said, because now even I'm getting scared. Okay. So this is a guy, this is somebody with 40 years experience. What is he saying? He's seeing the same market, he's the same people. But what is he thinking? He's thinking about how he has felt in the past. He's thinking about how he has been made to think or feel in the past, right? And he knows that whenever it gets this bad is when it actually flips. So that's the beauty, that human beings have this major advantage. I mean, for example, if there were stock markets in the jungle, they would do a horrible job. It would either only go up or only go down.
Correct.
It is surviving because we are human beings. Because at some point in time, we can regulate.
We can.
And we know that in the past, when I have thought like this, what were the consequences? In the past, when I have felt like this, what happened after that?
Yeah.
So I think that's a great strength to have, and we should use it. You should use it the most when you are in the stock market. You should use it always, but I think stock market is a perfect place to regulate and calibrate your emotions.
So tell me, you manage other people's money. That means you manage their fear, greed, and expectations.
Yes.
Is the real job of a fund manager managing money, or are you managing human behavior?
The first, see, look, the primary thing is obviously, I'll put it in two parts. The primary thing, there is no confusion. The primary thing is managing money. And when you manage a mutual fund, the least that people can do, they can buy Nifty, Sensex, Nifty 500, they can buy index, right? Because I always tell people, if you don't know what to buy, you just buy the market. So that's the least that smart people can do for themselves. So when we are managing a mutual fund, we should do better than the index. So that is the job. But what happens, Ashna, is that for people to experience that you can beat the index, and for people to experience that you can help them or aid their wealth creation journey, one of the prerequisites is that you want people to be with you. So for example, somebody invested with, a great set of expectations. Somebody invested a year back. Now I know that if you take India's economic history post-liberalization, 32 years, the Sensex roughly compounded 13-14% year on year. Almost every 4 to 5 years, between 5 to 6 years, Sensex doubles the money. But the point is, if you look at it closely, in any 5 to 6 year period, there are a couple of years when you get returns. The couple of years when the market is going nowhere. And every once in a while, the market falls 15-20%. Now, in 5 years, which 2 years are going to be the game changer? And which 2 years it's going to go nowhere? With all our understanding, let me tell you, it is not easy to predict. It's almost impossible to predict, because there are times when the market is going up, you think bahut ho gaya, it goes up another 20%. There are times when the market is going down, you think this is crazy, it goes another 10%. So it's difficult. You can recognize a pattern.
Yeah.
On average, you know what will happen, but day to day, right? So now the best intention, help people create wealth, outperform the index. But for that, people need to stay with you. Right? If people enter after seeing great numbers, if people enter in end of 2024, when they enter, they say, I'm a long-term investor, I understand this. In 1 year, if the index doesn't do anything or if the fund doesn't do anything, they say, oh my God, I should have left the money in the bank only. Why did I get in here? So what will happen? First year or two, nothing happens. People throw in the towel and then the market goes up. So while the job is to manage money, you need to hold hands with people and make sure that they stay invested. And that is where managing
Emotions.
Greed and fear through communication, through counseling, through public speaking, that is where greed, fear and envy is also important to manage. So while managing money is the primary task, I think communication and regulating your own emotion is very important.
Yeah, that's what I understand, because let's say I come, for people who are not from the finance world, like I'm not from the finance world, and breaking it down to very basics, if I come to you and I say that I've heard, you're one of the best fund managers and this is what I have, and let's, join hands and do something.
Yeah.
And like you said, if I walked in at end of 2024, when things were not looking great and till today they haven't really moved up, I can very easily be like, you're one of the worst people I joined hands with.
Absolutely.
But then that's where your understanding of human psychology comes in. That's where your understanding of human behavior comes in. That's where your communication skills come in to convince me, my greed, my expectations, managing them, that no, you know what, it's just a matter of time. Because humans, as much as we understand logic, but we still run on emotion.
Of course.
People think that only logic works, but I don't think in any phase of life we only run on logic. We run on emotions.
In fact, there's enough literature which says that people make decisions based on emotion, but they don't want to be seen to be emotional fools. So then they look for the data to justify the decision after it is actually made. Yeah. But see, there's one more thing we do. Like I said, primary task is managing money. Second is obviously to make sure people are staying with you and hence they enjoy the journey. Third thing we do is, since you gave example of 2024, one more thing which we do is we try to stay away from situations where we are pandering to somebody's greed. So take an example. When 2024 comes, the stock market is booming. Everybody wants to buy micro cap, small cap. By next month, we should be up 20%, that type of logic. So everybody wants to buy small cap and micro cap. Then there'll be times when everybody wants to buy defense sector is the place to be in. It becomes consensus, right? So we spoke about it. When something becomes consensus, what I would do or what we try to do, stay away. If somebody is telling me that, you must have a small cap fund, and then I would think that, okay, why is so many people recommending me that I should launch a small cap fund? Why is so many people recommending me that I should put money? Like, sometimes we get suggestions. Like few days, we have a fund which was investing in gold and silver right back in 2023. So Ashna, what happened? Somewhere in September, October, November onwards, equity market became cheaper, gold went up. So it's basic math. The fund will start selling gold and start buying equity. Even now, that's what the fund is doing.
Correct.
You start reducing gold, start buying equity because it works on relative value. So there are so many times I get messages that, why are you selling gold? I said, it's gone up 2.5 times. It may go up further, but some point in time we need to recalibrate.
Balance,
we need to rebalance. No, you should have gold. I said, but you never told me this in 2023. So no, you should have gold. हमारे शास्त्रों में लिखा है gold तो होना ही चाहिए. I said, sir, लेकिन कल नहीं लिखा ना, वो तो हजारों सालों से लिखा है. तो why are we, right? So when everybody starts showing conviction, then we have to. So what we do is that apart from managing money, communication, one thing we do is that try not to pander to greed and stay out. That's the thing.
So tell me, your father passed away when you were young. And your family later discovered forgotten equity investments in names like Reliance and Hero Motors.
Yeah.
How much did that story, wealth quietly compounding without anyone watching, shape the way you think about long-term investing today?
Yeah, so the least I can say is that, look, a lot of the literature in our industry, a lot of the literature about stock market, a lot of the literature about how famous people created wealth, a lot of the literature, right from somebody buying 10,000 rupees worth of Wipro becoming hundreds of crores, or Mr. Jhunjhunwala owning Titan, or Mr. Ramdev Agarwal owning Hero, so many of these things, right? A lot of the folklore and success stories is about people holding on to stocks forever. And I also know that for the regular human being who has not experienced this, they would look at this suspiciously, saying that, look, first of all, there's so much survivorship bias. For every few stocks which have gone up, there are like thousands which are, absolute dead.
Correct.
Right? And then if someone like me says that you can generate wealth in the long term, then people say, okay, he's a mutual fund guy, it suits him to
say that. Yeah.
Right? You would expect me to say that, so what? But for me, the only advantage was that because I had seen it myself, right? With my mom inheriting a portfolio from my dad, forgotten, lying in some files, discovered after 10, 15 years of him passing away.
Correct.
So I knew that all this is not story. I know it happens, right? So at least I had that grounding. At least I did not start. See, people would start, when they hear this, people start with skepticism.
Correct.
Right? And I personally feel that to make money in the market, equity is for optimists. I always tell people that stock market, equity is for optimists. And when you invest, it's healthy to be skeptical, but it is a disaster to be cynical. So I had that advantage that I had proof of concept. And plus, of course, I studied finance and also, I could relate things.
So let's talk about conviction versus ego. Tell me, you've described yourself as a professional entrepreneur and someone who builds system without taking personal financial risk. But building White Oak from a boutique into a 78,000 crore company is deeply personal. Where does the professional end and the person begin?
Yeah, so see, very interesting. So I would just say that, so a couple of things. So White Oak, of course, my boss, our founder is Prashant Khemka. He used to be CIO for Goldman Sachs. He worked there 17 years, quit his job, started White Oak in 2017. And I was recruited or got into the boat to set up the domestic business. So what I manage, actually, I'm CEO for domestic. So that is about, give or take, 42,000 crores. The larger firm is now much bigger. It's 11 billion, so maybe over 1 lakh crores or so. Now, when you say and before that, in fact, I used to work for Motilal Oswal.
Yeah.
So I was CEO for Motilal Oswal's mutual fund. I was involved in kind of helping that to be set up from 2012 onwards. So twice I have been lucky twice to be working with very illustrious founders who were kind enough to consider me as a professional to work with them and set up the investing practice for them. Now, when you really look at professional versus personal, I think as a person, I'm somebody who likes to do, who likes to create or who likes to build. There are very many people who have a different skill set, which is that they can. I know that there are certain companies, there are CEOs who are CEO of that company for like 20 years.
Yeah.
And they are running a large ship, which is a steady ship, right? That I haven't done that really, if you ask me. Why I said professional entrepreneur is because I'm a paid professional, but I like to do entrepreneurial things, which means that it's not my capital on line, but only my neck on the line.
Yeah.
Right? And I think that gives me satisfaction to create something, to walk in with a plain piece of paper and a pen and start writing down, like a strategy, a process, a team structure. And then, the beauty is that when you're doing this, it is I love the point that it is your hypothesis which is being tested.
It is.
Right? I mean, see, you can run a large ship, you can run a company. You're not making a new hypothesis every year or every 2 years.
Correct.
Right? But in my shoes, what I've seen is that every year or 2 years, you make a new hypothesis, it gets tested, it works in the market, you feel great about it. Right? And I think that is what is exciting. Plus, you're always creating new teams. You're working with unknown set of people. So I think it's fun to be exposed and fun to be vulnerable.
I think life also kind of tests every human being, right? And I think life tests us maximum when we are so sure and we almost may not accept we're arrogant, but we can be because we're so sure of ourselves. So I think that kind of surety, no fear left, is also arrogance in some way.
I tell people that only dead people can be dead sure.
Yeah.
Everybody else has to be open-minded and probabilistic.
Yeah, correct. So I think if life tests you like that, I'm sure the market does as well. And I think market also punishes arrogance very quickly.
Of course.
Tell me a moment when the market humbled you.
So, of course, the market, I mean, I would always tell people, in fact, one of the jobs of the market is to break your notions and, test you and challenge your conviction. Right? The day, in fact, previously I gave you example that whenever somebody thinks Apunish Bhagwan hai, then the market throws them down. And whenever you start thinking world will come to an end, the market actually says that, okay, market is supreme. I think in terms of learnings, I can give you a few examples. See, what happens is that I have been doing the same job now for 26 years. I mean, same industry, correct? When I started, I think I must have been 23, 24. When you're younger, the first thing which I've learned is that when you're young, you're sure about everything. Like, you have complete clarity. When you're young, you're idealistic. You know this is right, this is wrong, this is good, this is bad, correct? But by the time now I'm 50, and when you get to, at my age, you start thinking, at 25, you think, mereko sab pata hai. At 50, you realize, yaar, mereko kuch nahi pata hai. You're basically not sure of anything. So I think that transformation, that itself is, I think, one major thing. But I give you two examples. One is, really, if you ask me why I said that it is never predictable and it always humbles you. So I'll give you an example in 2019 end, right? So when you're an entrepreneur, a lot of your compensation depends on equity.
Correct.
Right? Because you have a stake or something like that. Now, what happened, and by the way, I don't know if you know this, in our country, the tax laws are such that if you exercise stock options, all companies are not listed. Sometimes you exercise stock options of companies which are unlisted. But the laws of the country is that the tax liability is not when you get liquidity, not when you sell your stake. The tax liability is when you exercise your equity. So a lot of people, by the way, end up borrowing just to pay tax. Because when let's say you're exercising stock worth 1 rupee, value of the stock is 10 rupees. So your gain is 9 rupees. The stock is not listed, you're not sold. But your gain is 9 rupees. If you count 40% on 9 rupees, it is 3.6. So 1 rupee of exercise and 3.6 rupees of tax, let's say you're going to pay. But the 10 rupees which you get in your demat is not saleable, right? So when you exercise, I mean, which means that to get 10 rupees worth of equity, you need 4 rupees.
Correct.
So our laws are such that to exercise equity first, you need to be a rich person already.
Yeah, you need to have that.
Yeah, which most of us are not.
Yeah.
Right? So when you have to exercise, it's very common but not spoken about. When you have to exercise your equity, you have to borrow. And what are you borrowing for? Equity to 1 rupee ka hai. You are borrowing 3.6 for the tax. So you borrow and you pay tax. In the hope that when the liquidity comes, the first thing you will do is you will sell some stock, square off your borrowing. Okay? So it's a well-known, and someone like me knows you're not supposed to borrow and invest in the stock market. No, we know. I mean, what is new about it? The stock market goes up and down, so you're not supposed to borrow and invest. But there are certain circumstances where you can't help it. You have left no choice. Because what are you going to do? Are you going to say, okay, I'll not exercise my equity? You're not going to do that. If you don't exercise, the price goes up, the tax liability actually keeps going up. So I'll tell you an interesting thing. In 2019 end, I borrowed and exercised equity, knowing that in about 6 months or so, this stock will become liquid, I'll be able to sell. And then what happened? In 2020, the market fell 40%. So I have 1 rupee of equity, 3.5 rupees of tax. That 10 rupee has become now 5 rupees. What am I left with? Right? So what do you do in those 6 to 7 months? Grit your teeth and just sit, don't do anything. Correct? But what if I panic? If I panic and say, get rid of this, close this, right? So these are real circumstances. This is, see, you can come on TV and give a lot of examples to a lot of people, but you have to go through it. I mean, when I tell someone, don't panic, keep patience, you must know it is with experience. It's not like I'm just giving some prescription. I'm not writing prescriptions to people.
That's true.
I'm
you
saying
must have
faced
it, lived it, seen it for yourself.
Of course. Yeah. That you are. What are you doing? It is something you earned. You are exercising it because you earned it, and it is going to become zero. That's the feeling you get, right? That, oh my God, if it is zero, then what have I done? I've only paid tax. I have not got anything. But you grit your teeth, stay put. You apply what you believe, and then obviously there is sunrise, at the end of the year.
I think also in the finance world, maybe people are a little unforgiving, in the sense that, for example, if somebody asks me to do some work for them, and if it doesn't go well, it's like, oh, okay, can you try again, or let's revise it or whatever. But I think in the finance world, it's almost like the mistakes are not expected or managed really well, because it's like, for example, Aashish has this portfolio and Aashish has 26 years and Aashish has done so well. How could Aashish fail in my case? There the humanity part of it is kind of missed.
So I
think finance is on the line. I'm just assuming here. Like I said, I'm not from the finance world, so I don't know. I think this is where people are a little less unforgiving.
I'll tell you, it's not easy for people also, and I can understand why they're unforgiving. I think the challenge is that it's all supposedly crystal clear. The numbers are out there, so I can tell you anything. Like I give example of my own experience with my own portfolio. But forget my own experience. When I'm dealing with, other people, or let's say you're dealing with somebody and it's a matter of money or finance, or say our NAV every day. The point is that even if you want to be lenient, and even if you want to give benefit of doubt, what is weighing on your mind is that every evening the NAV is declared, and every day, every second stock prices are changing. So what happens is that you will draw conclusions. The moment the price, you decided today that give him time. 7 days later, the price goes down further. So you're forced to draw conclusion. And by the way, it doesn't happen only in finance. It happens with everything which has a scoreboard. Look, if you're watching a match, you must have watched this final probably.
Yeah, of course, India and New Zealand.
When India was batting, for the most part, it looked like we'll win. Then in 1 over, there were 3 wickets. And then you started thinking, oh my God.
Doubt sets in.
ये सब कुछ करने के बाद, if we're going to end up at 225 runs, then what's the point? So you have it. So now what happens is, some people would have drawn conclusion. These guys, they just can't keep it together. देखा, we've never won against New Zealand. यही होना था. अहमदाबाद का pitch है, New Zealand है. We've never won against New Zealand in a World Cup. Ahmedabad, anyway, you saw our track record. Finished. It's over. So when there's a scoreboard, people start drawing conclusions.
Yeah.
Right? Then New Zealand started batting. First over, that guy dropped a catch. You're like,
they can't.
Their best batsman, we've dropped a catch. Right? So what happens, anything which has scoreboards, the problem is people will start drawing conclusions. And my biggest learning, even the example which I gave you of 2020, which I personally experienced, do not draw conclusions. It's very difficult to watch a scoreboard and refrain from drawing conclusions. Because ultimately, stock market or life is not a T20 game. Thankfully, it's not going to end in 20 overs. There is another day, right? And we will move on. So for being successful, it's very important not to draw conclusions. You keep the scoreboard, you say, okay, right now it's not looking good. Let's see. And then it will change. But if you draw conclusion and say, khatam yaar, ye log se aur kya expect kar sakte ho, niklo yahan se, then you precipitated the loss. It ends. So being open-minded and, allowing the scoreboard to move on and not drawing conclusions, very important.
I like that. I think I agree with you. In life, I think the minute you think this is it, it never is.
Yeah.
So, yeah, I completely agree. I don't think we should draw conclusions in anything because you never know. Like, they always say tomorrow is another day.
Yeah.
And like the weather changes unpredictably every day. Everything changes every day. You just don't know what's to come.
You should, I think context, perspective, all these things are very, very important.
So, let's talk about risk. It's, I think, a misunderstood word, and I would like you to clarify it for us a little bit. People think risk is volatility, but many great investors say risk is permanent loss of capital. What is your personal definition of risk?
Yeah, I agree with that observation. I think it takes a lot of experience, and I'm sure there are very smart people who have said this. One of them, for example, is Howard Marks, widely followed in our industry, quite a guru actually, and I read a lot about what he writes. And I agree with this definition that, a lot of people think, say when you talk about stock market investing, and by the way, concept of risk for an individual stock versus concept of risk for people like us who manage like a broad portfolio, correct? We generally manage diversified portfolios. We don't bet on one stock.
Correct.
So I would just clarify that I'm not talking about one stock or FNO or anything like that. When we run a diversified portfolio, we can rest assured that volatility or fluctuation is not risk. Sometimes fluctuation happens purely like you said, there is a war or there is COVID or the economy is going through some tough times, interest rates are going up, liquidity is bad. So what happens is that performances of businesses, they can get tailwinded or headwinded.
Correct.
Right? And in any business, you must have seen sometimes you put 1 rupee of effort, the environment is good, you get 1.5 rupee of result. There are times you put 1 rupee of effort, you get like 25 paisa of result or no result actually. So it happens everywhere, especially happens in business and stock market. Sometimes the environment is tailwinded, sometimes environment is headwinded. So if you think that I mentioned that 32 years since liberalization, say Sensex compounded 14%, that 14% Ashna is an average. In good times, when something compounds 14%, it should double your money in 5 years, on average, but. In good times, it doubles in 3 years. In bad times, it might take 7-8 years. Correct? So what happens is that there will be years when it's not 14, 14, 14. There will be years when sometimes it's up 20% and then the next year it's down 5%. That is just the amplitude. That is just the amplitude.
The range.
Whenever there is something which has given an average return of some percentage, then average automatically means that there is a minimum and there is a maximum. And the minimum can be negative and the maximum can be hugely positive. So I think these are cyclical phenomena, and I think that fluctuation in price or variability of outcomes, variability of returns is not actually risk. But if you invest in one company, if you bet on the options of a particular index and then the company goes bust, or you get your call on the market direction is wrong and the options expires with a loss, that is money gone, that is capital lost. It's not going to come back by just you waiting.
Correct.
When there is variability of outcomes, you stay sufficiently long, you will recover and you will make a return. But when you bet on one company which goes bust, or when you take a bet in options and your directional call goes wrong, that's money not going to come back. Waiting is not going to do anything, right? So I think that distinction people need to understand. Most often people make mistakes because they think variability of outcome is risk. Variability of outcome is something you can just tide over. You stay put, things will get better, all the things that we discussed. Yes, the real risk is loss of capital, and that is what one should avoid.
Correct. Do you believe the biggest risks in markets are usually invisible until it's too late?
It happens sometimes. It happens sometimes, meaning that some things, when you talk about macroeconomics, when you talk about, like, say, sorry to get back to the same thing, but COVID, for example, largely unpredictable. You can't do much,
Yeah.
right? But like I told you, if somebody interviewed me in 2025 and I said 2026 will be more of the same, it's not some great forecast I made. It's just that you can see around you, right? I mean, there is this big rip-roaring AI rally happening. There is so many parts of the world are involved in confrontations, right? US has been on a tear now for 15 years. I mean, which rally lasts for 15 years, right?
Correct.
So you can see that the environment, and it's not important to predict. It's just important to have some probabilities in mind. Just think that, okay, where I am standing right now, what is the probability that this can go up 20%? What is the probability it can go down 20%, right? We've all been on a roller coaster. When a roller coaster keeps ratcheting up, right, you feel great, cool wind blowing. You can see, if you're in Hong Kong Disney, you can see the whole ocean. You feel great. But you should think, what's the probability from here it will go up further? And what's the probability it will start going down? When the roller coaster is going down, at the absolute worst, you're like literally hiding like this, right? Holding the handlebar and hiding under. What's the probability it will go inside the earth? And what's the probability it will swing up? So I think it's not easy to predict. A lot of things are impossible to predict. Only thing what one can do is have a sense of where we are in the market cycle and then think that from here, what is the probability of what is going to happen? And then, calibrate your investments.
Do you think Indians culturally are as patient when it comes to investing as other countries?
I think that, there are so many nuances to your question. I mean, one of it is, for example, the demography itself. I mean, right now, if Indians are impatient, why should we be surprised? I mean, when I was 22 years old, I was impatient. I mean, bulk of our country is below 30.
Correct.
So I'm not surprised if they are impatient. And I think at any point in time in the stock market, there will be cohorts of people. There is a lesser cohort like me who's been around because, that's just the demography. But there is a larger cohort. But at any point in time, you'll have a cohort of people who have seen 3 market cycles. At any point in time, you'll have people who have seen only they came after 2020 or they came last year. Different cohorts of people, different experience, different levels of patience. Some will know this is how it works, and some will think, oh, it's a horrible place. I mean, what is all this song and dance about, right? So different people, different. Same way, different countries. Like, I mean, even in US, I think young people are, trigger happy, and maybe experienced people do it differently. So no generalization, but I think the nuance is related to economic development.
Yes.
What history have you seen?
Yeah.
Like, for example, in late 90s when I started working, there was no history to talk about. There were only scams and there was, not so much regulation, no technology, lot of scams. So I didn't have much history to go by. First time the market tanked after 99, 2000, I thought I'm in the wrong place, right? ये हर दूसरे साल क्या हो रहा है? Am I in the right place or not? But now there is such a long history. We know this is how it works. Almost every alternate year it falls 10-15%. So what? This is how it works. So how much history have you seen? What is the level of evolution of the market? What regulation and technology you have? I think we've come a very long way. Market will always be volatile. There'll always be people with different experiences, but market is safer today than 25, 30 years back. And as a country also, I think we are in a better, in the 90s, if you were investing, how much of it was speculation and how much of it was science, you could debate. Today, I think that if you do it the right way, if you research, if you, get the right knowledge and information, there is a possibility to stay or be on the lesser side of speculation and more on the side of better understanding. Let me put it that way.
Tell me, does wealth creation through markets change how you view money itself?
I think personally, if you ask me, ultimately there is only one way to create wealth, which is to own or run or manage a business, right? I mean, if you see, look at it this way, there are only 2 types of people. One is people who have capital, which is more than the ideas that they have, right? And there's another bunch of people who have very big ideas and not enough capital.
Correct.
So the richest man in the country also has taken your and my capital, right? Why? Not because he has dearth of capital. It's just that his ideas are so big that he needs pooling in of resources. On the other hand, there are many people, including someone like me, we are investing in somebody else's business. So we have capital, but we don't have the size of ideas or the grandiose ideas that they have, and they are actually successfully implementing. So I think that the only way to create wealth is to bet on people who are entrepreneurs, people who have ideas and who will take us ahead. Rightly, wrongly, willy-nilly, directly, indirectly, we all are doing the same thing. We are betting on people with ideas, and that's how the whole stock market works. So that's the only way to do it. Now, coming to wealth itself, so I think that this is the best way to create wealth. It's the cleanest way to create wealth, right? Our country is formalizing more and more. It's becoming more capital market oriented. The government has worked very hard to constrain the parallel economy. If you see, for example, even something like real estate is becoming more and more professionally managed.
It is.
Right? From world over, formal institutions are putting money in our real estate.
Correct.
The stock market was always, more and more professionalized, more and more regulated. So I think the best way to create, the right way and the best way, the most productive way takes the country forward. No better way to create wealth than to bet on people who have ideas.
I agree. And I think that's what, like you said very correctly, that's what we're doing anyway in life. We are always betting on people and people's ideas.
Yeah, of course.
Do you think after decades in market, do you believe that wealth actually brings freedom, or do you think wealth actually brings responsibility?
It is responsibility. In a country like India, I definitely believe it is responsibility. See, because when you say freedom, wealth brings freedom, I think that's a very personal definition, right? My wealth can bring freedom to me, my family, my relatives, maybe to my friends. But it's at some point in time, the freedom definition makes it restricted to my sphere of influence. But when you talk about responsibility, I'll give you an example. There was once, I was talking about equity investing and, this kind of conversation. So at the end of that 1.5 hour round table, few rich people, and I was invited to make a presentation to them. At the end of that, when people are having coffee, a very respected gentleman, he was 81 years of age. He told me he's 81. So he said, by the way, he took me on the side and he said, my net worth is my portfolio, my net worth, I've sold my business, I'm probably 100 crores. And you spoke very well, I understand equity, but beta, what will I do with all this? I already have 100 crores, my kids are abroad, they are not, so what should I do? What will I do listening to you? I was already 100 crores there. So I said, sir, have you thought through that if you follow what we are discussing, if you follow our economy, if you follow our market, and if you invest judiciously, have you thought that when you're 81, you're 100 crores? So have you thought that by the time you're 86, it can be 200 crores? So he stopped, he said, but so what? So what will I do with it? I said, please understand, 99.99% people in India don't have the first 100. You are here asking me what to do with 100 crores. My point is the others don't even have their starting point. They are not in a position to think of it or even ask that question.
Correct.
So it is your responsibility to grow it because the others don't have a chance, right? So you have to grow it because you have that advantage, you have that starting point. It becomes your moral responsibility to grow it because, you agree or disagree, I don't know, but that 100 came to him because of the ecosystem, because of the society, because of the country.
I was just going to say, there's
Right?
always an ecosystem when it comes, and it's not just one person, it's that ecosystem that benefits.
There is regulation, there are politicians, there is bureaucracy, but then there are your employees, there are your suppliers, there are your customers. Your wealth comes because of the entire
Ecosystem,
right?
correct.
So at some point in time, if you reach a stage in life and say, what do I do with it? Make a school, make a hospital, give it back.
That's true. You can always bring it back to the society.
So that's why I said it actually at some point in time it becomes a responsibility. When you start thinking, na, main kya karunga paise ka? That's wrong. Then you have to think in responsibility terms.
I agree. And I also think that, like you said very correctly, wealth is not just about how you feel about it for your life.
Yeah.
It's actually how you're affecting the community, the society, and your country at large, or the world at large.
So once I went to a wealth management conference and there was a whole discussion happening, and then somebody stood up in the audience and asked me an esoteric question. He said that, yeah, we are discussing since 1 hour, but can you tell me what is the definition of wealth? I said, sir, only somebody who has made a lot of wealth can ask this kind of question. 99% of the country is very clear what is wealth and why they need it. Right? Only people who have made the wealth are thinking, ab iska kya karna hai?
Correct.
I said, if you're not sure, please pass it on.
Yeah, that's true. I think your average human is looking to have the basic,
ऐसा
life
सब सवाल
together.
कौन पूछता है कि what is the definition of wealth? I
Yeah.
mean, very few people don't know the definition. For 99% of the people know why they need it.
Of course, I completely agree. At what point does pursuit of wealth become counterproductive to life?
I think when it is done the wrong way. I think when you are bending rules, making wrong interpretations or self-serving interpretations of rules, I think if it is done the wrong way, that is where, you're somewhere subtracting value. Till now we were thinking about, discussing about adding value. Then you start subtracting.
You meet so many people who are above your average line of wealth, right? They all come to you for wealth management.
Course.
Tell me, do you feel on an average that these people are looking at the worldview growth, or they're still looking at personal growth and there's greed behind it?
No, I think that, so to be honest, because you are asking questions and I'm responding based on my experience or my thought process. But I don't think, thankfully, I don't think I have said something so profound actually. If you ask me, I meet enough people who understand and realize, and they feel that yes, it is responsibility, not just freedom for them and their family. Also, what I've seen is that not everybody is just trying to maximize blindly. I think people understand all these things about psychology and cyclicality we see. Increasingly, people are appreciating that, and they understand that if you steadily generate 10-12%, it is better than trying to shoot for the moon.
Correct.
Right? So I think the awareness and level of maturity is much higher, and we know people are doing good work in society. There are very good organizations that people are setting up, charitable trusts, people are working in education, healthcare, so many things. So I think that awareness is rising. It's just part of economic evolution. It's just
I know,
part
I
of,
just think that an average person must think that, these portfolios are managed, and I'm sure everyone's looking only for the self-gain, which is why I wanted to kind of, see your perspective, because you're the one who's managing it.
No, so, see, look at it this way. A lot of times it does happen. Like, when I gave an example, if I tell people that to create wealth, you should invest in equity, people might say, yeah, it suits you to say that. But the point is that it is grounded in economics, it is grounded in science, right? We've been through cycles. And the point is that the world is frankly not as needy and greedy as you and me think. I mean, there are some people who are doing a lot of things just for the passion.
Correct.
So if I'm doing the same thing for 26 years, I can do it for another 26 years, but it's not going to change some major outcomes for me. And I do it because there's the only thing I know how to do. So that's the point.
So tell me, what do you truly believe about how the universe works? Not as a fund manager, not as a strategist, but as a person who has lived through loss, lived through building things, watched brilliant people get humiliated by the market.
Yeah.
Is there any order to it, a fairness, a logic according to you?
Wow, I haven't thought so much about it, but maybe, yeah, see, I think you focus on doing the right things. Like karma, right? It is called, right? So the point is that I'm not very well read when it comes to spirituality, and not very well read when it comes to religion.
That's okay.
All of those
Your
areas.
opinion is good enough.
Yeah, but I think that if I have to conduct myself, then definitely I feel that keep your, try to do right. I can't claim that in 50 years I have done always everything right. But yeah, if one abiding principle, that would be try to be on the right side.
And according to you, the relationship that matters most to us, that shapes us more than any philosophy or framework, who is the person in your life, the mentor, professional, personal relationship, who has shaped you as the person that you are today?
Yeah, so I think phases, very clearly phases, right? Like for example, my mom has a big role, my elder sister. I think if you are a young boy, having an elder sister is a blessing. So yeah, my mom and so I'll give you an example. One thing I learned from my mom. We were taught, like, at our house we have a small temple. So we obviously worship Balkrishna. So for us, God is a kid, right? So I was told very long back, like maybe when I was a kid myself, my mom told me that God doesn't do anything for you. Whatever you decide to do, God doesn't deign or preordain anything, right? So whatever you decide to do, God says tathastu. He's with you in what you do. And the second thing I was told long back, that because we worship a God who himself is a baby, so we don't ask anything from God. We just take care, right? So The relationship with God, I don't say I'm God fearing, I'm God loving. That is the relationship that we have been taught. So early days, mom and my sister, then very lucky with bosses, illustrious bosses, like all through. And then my spouse, for example, huge influence. By what do I mean by huge influence? Meaning that somebody who very quietly keeps me on the right type. Somebody who encourages me and motivates me and eggs me along, but keeps me in my place also.
I think all spouses are supposed to do that. Show you the mirror and humble you. So tell me, Aashish, if markets are a reflection of human psychology, what does the market teach us about ourselves?
Never be sure of anything. Be open-minded. But yeah, when you say teach us about ourselves, I think market exposes our fears, our weaknesses. It brings it out like, the thing which your best friend will take ages to do, or the thing which your best friend will have a lot of trepidation in expressing to you. But how you respond to how the market is treating you, it brings out your fears and it brings out your, behaviors. So I think, yeah, that's a big thing.
And lastly, I want to know, if a 25-year-old asked you for one mindset to adopt for the next 30 years as far as the financial markets are concerned, what would it be?
Be optimistic and, be skeptical, don't be cynical. Very, very important. I think, in today's world, what happens is that there's so many opinions that are bombarded. Don't take anything as gospel. Be open-minded. Be open to probabilities and possibilities. And if you don't jump to conclusions, that's better. It's very, very important.
Thank you, Aashish. This has been an absolutely great conversation, and I really enjoyed learning about finance from you, and I hope our listeners enjoyed this as well.
Thank you. Thank you. Hi everyone, my name is Aashish Somaiyaa. I am Executive Director and CEO at White Oak Capital Asset Management. I've been associated with investing in India's equity markets for the last 26 years. And if you want to know about investing in India's stock market and more specifically about the psychology that goes into investing success, please watch this episode on the human thread on all platforms.